Ladies and gentlemen, good day and welcome to the Q4 FY24 earnings conference call of Tata Consumer Products Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manoj Menon from ICICI Securities. Thank you, and over to you, sir.
Hi, everyone. As always, it's our absolute pleasure at ICICI Securities to host the results conference call of Tata Consumer Products. A wonderful good morning, good afternoon, good evening to you, depending on the part of the world you're joining from. Now handing over the call to Nidhi Verma from the management for the introduction and for further proceedings. Thank you.
Thank you, Manoj. Thanks for hosting us. Welcome everyone to the Q4 and FY24 conference call for Tata Consumer. I am joined by Mr. Sunil D'Souza, Managing Director and CEO, Mr. Ashish Goenka, Group CFO, and Mr. Ajit Krishnakumar, Executive Director and COO. I hope you have had the time to go through the materials that we put out yesterday, but as we usually do, we'll spend about 10 to 15 minutes going through the key performance highlights of the quarter and the year, and then open the floor for Q&A. I just want to draw your attention to the disclaimer statement which is on your screens right now. With that, I will hand it over to Sunil.
Thanks, Nidhi. So if I walk you through the executive summary, overall our top line was up by 9%, in constant currency 8%. India Beverages flat volumes but revenue grew 3%. India Foods continued strong trajectory, including Capital Foods was up 20%. If I exclude Capital Foods 11%, like-for-like volume growth, and this is primarily driven by salt, was 4%. International business 7% revenue growth, 5% in constant currency. Most importantly, significantly improved profitability. During the year, consolidated revenue up 9% in constant currency. India Beverages volume up 2%, revenue up 7%. India Foods like-for-like is 15%, including acquisitions was 18%, with a 5% like-for-like volume growth. International business was up 9%, 5% in constant currency. The big big bright spot for us is that the India growth businesses continued their strong trajectory, growing 40% in FY24, accounting for 18% of India business, up from 15% last year. We had a strong improvement in overall profitability, consolidated EBITDA growth of 24% and margin expansion 170 bips to 15.3%. On a MAT basis, the India business saw marginal share loss. That said, quarter on quarter, we are seeing stability/improvement. Salt shares are up to close to 40% right now. Just to recap, when the merger happened, we were at a 30%. They improved by 50 bips on a MAT basis. Innovation to sales ratio up from 3.4 to 5.1. I would say towards the top quartile of the industry now. Front-end and back-end integration for Capital Foods was completed within 60 days. We had always set out a target of full integration in 100. We are on track for that. Transaction for Organic India closed on 16th April, which is this quarter, and therefore you will not see the numbers for Organic Foods in the last quarter numbers. And again, the target for integration is also 100 days in the case of Organic India as well. We continued our good work on net working capital. The India core business is down to 0. Overall, as a company, we are down by 8 days versus last year, down to 27 this year. India, including all the other businesses, apart from tea and salt, we had a net working capital of 4 days. In terms of performance for the quarter, I talked about 0 volume growth and 3% revenue for India Beverages. India Foods, leaving out Capital Foods, was 4 volume and 11 revenue. Including Capital Foods, and just as a perspective, Capital Foods was only February and March, was 5 volume and 20 revenue. US Coffee, volume growth of 6 and revenue growth of 3. International Tea, broadly flat, -1% volume and 9% revenue growth. and non-branded had a 4% revenue growth. Overall, 3,927 crores and growing 9%. For the full year, 15,000 crores revenue growth across all segments excepting for US coffee, where we've seen significant volatility in coffee prices, and we moved our numbers up and down on the shop floors as coffee prices have moved. Double-digit revenue growth of 10%. In constant currency, it is 9%. In terms of group performance, 9% revenue, 22% EBITDA, before exceptionals PBT of 12, before exceptionals group net of 46. We had exceptional items of 200 plus crores this quarter, because of which the reported group net profit is negative 27. We've used a significant amount of cash for the acquisitions in India, and therefore net cash, while we've been constantly showing you close to 3,000 crores on the books, is now down to 118 crores. In terms of the full year, 10% revenue, 24% EBITDA, 24% PBT, 29% group net, and because of the exceptionals, apart from this quarter about 200, if you remember, we had some significant numbers last quarter, primarily the UK pension numbers, which therefore the group net reported is negative 8. Against the strategic priorities, we're still almost there, still not fully there. We are implementing a split route implementation in all million plus population towns, and a significant amount of 500,000 plus population towns. We are going with 3 routes. Just as a perspective, broadly it is beverages plus organic, it is salt plus sampan and Yumside, and it is Soulful plus Capital Foods. Our significant gap on distribution was in the lower pop strata, and we've had a huge focus on adding distributors in all 50,000 plus towns. We've added roughly 1,300 distributors in the last year in our urban markets, and now we are focused on building a super stockist sub-distributor network to reach less than 50,000 population towns. We are now at 1.6 million direct reach, reaching 4 million outlets. Very strong performance in the what I call channels of tomorrow, modern trade and e-commerce. Between the two, they contribute to 25% of contribution now to our business. We've had a significant number of new SKUs on shelf. Soulful, because it is available in modern trade, has seen a significant growth of 65%. And we have seen a significant improvement in our premium salt salience in e-commerce, which just lends credence to the fact that we now need to expand the distribution of this portfolio. India business overall, we continue to add to brand building. Our A&P spends were up 16% versus FY23. Salt market share was up by 50 bips. Overall, I talked about the softness on tea market share, negative 50. The only point I would like to make is while overall Nielsen does show a 7% growth in the tea business, we strongly feel that we have not lost market share, and therefore we would wait for competitive numbers to see where this pans out. We have upped our innovation engine, and effectively we've launched one launch every week of the year. Our innovation to sales ratio is now 5.1. As I mentioned, we are in the top quartile of the FMCG space in India at least. And we've added products across all the 3 big verticals that we were looking at: convenience, health and wellness, and premiumization. We've had a significant step jump in digital transformation. We are in the midst of rolling out our new distributor management system and Salesforce app. This is built on the Salesforce platform. It is not an out-of-the-box solution, and therefore a very, very customized but very adaptable platform for us to enable decision-making at the front line. Apart from that, we've digitized a significant portion of our back end, including procurement and logistics. We had committed to simplify, synergize and scale our businesses. We finished the merger of Tata Coffee during the quarter. 1st of January was when it became effective. We've announced the amalgamation of all our subsidiaries in India. That will bring another round of synergies and simplification. And we have already on track on our international simplification. And a part of that has already started flowing through into our P&L as we walk you through it. Growth businesses, we had said the target was 20% of our businesses growing at 30%, and with the new acquisitions, we are on track for 30% of our business growing at 30% in India. For the full year, we've delivered 40% growth from our growth businesses. We are walking the talk on sustainability. We've already put out our FY26 numbers out there, and across all different items, we are making progress. Now, in 4 years of TCPL, effectively, the India branded business has delivered a CAGR of 16, international 5, overall a 12% revenue growth, translating into a 15% EBITDA growth and a 27% group net profit. And we've unlocked efficiencies. Our working capital is roughly half of where we started off. India has made significant progress. International will continue to make progress. EPS is up significantly from 5 to 12.3, a CAGR of 26%. Operating cash flow is now 101% of EBITDA, and total shareholder return in the last 4 years is roughly 400%. In terms of the macros, tea costs broadly benign. Coffee, again, a bit of volatility with Robusta leading the charge, moving up, and Arabica moving up in tandem. We need to stay very close to this, especially for our US business. In terms of business performance, overall revenue for India packaged beverages up 2. For the year, we grew with 2% volume growth, revenue up 3. 4-year CAGR of the beverage business is 9%. The significant part is now 2/3 of our portfolio is in the mass premium to premium segments. Coffee grew strongly, 29% growth for the year, accelerating to 45% for the quarter. Important is also that we continued our leadership, market leadership in the e-com channel. Just another perspective, I think we've not alluded to it earlier. We have incubated a vending business, and now the vending business has crossed the 1,000 machine milestone. India Foods, like-for-like revenue growth of 11, volume growth of 4, and overall revenue growth of 20. Salt has hit a 40% market share. Tata Sampann finished on a strong note with a 42% year-on-year growth in Q4. Soulfull grew 42. Narishco had a slightly subdued quarter given the delayed onset of summer. Just as a perspective, in many parts of the country, the onset of summer is determined not by the temperature outside, but the onset of Holi. Holi was about 20 days late this year, and we are seeing strong traction in the business now. Overall, Narishco grew 13% for the quarter with 204 crores of revenue. We had guided for close to 900 to 1,000 crores of top line for the year, but we ended up with 825. But we remain bullish on the business because of 2 or 3 big reasons. We have almost grown 50% in outlets last year. That will stand us in good stead. Innovation continues to be a strong engine there at a 20% innovation to sales ratio. And we have augmented capacity and distribution to prepare for the season in this year. Non-branded business, you will see a consolidation of the non-branded business into the TCPL P&L for this quarter. Overall, plantations revenue was down, but that is primarily because we had a bit of, a pause in sales while we did name changes from Tata Coffee to Tata Consumer. So auctions and overseas customers, we had a bit of a hiccup. Therefore, there is an inventory sitting in the businesses rather than getting translated into sales, which should get corrected very quickly. But solubles revenue grew at 19% and revenue grew 4%. Tata Starbucks, while they had, I would say, a subdued quarter, given the overall trends that we're seeing in the QSR business, we saw March better than February and April better than March. So we see a better trend right now, but we remain focused on the larger India opportunity. We opened roughly 95 stores. We are in 61 cities. revenue of 1,200 crores, targeting 1,000 stores by FY28. Our international business was a star performer for this quarter. Overall UK revenue growth of 11. We are at a 20% market share in everyday black, and strategically we needed to grow our market share in fruit and herbal. We are now at a 9%. UK delivered a very strong EBIT performance as well. The US revenue growth was up 2. Our market share is in the ballpark. Canada continues to be the star with 9% revenue growth and a 28% overall market share. This quarter, we've always maintained that the role of the international business is accretive EBIT margins compared to the overall business. In this quarter, the international has delivered to that level. I'll ask Ashish to walk you through the financials quickly.
Thank you, Sunil. Just turning to financials, key highlights. Our standalone revenue grew at 13% for the quarter and consolidated revenue grew 9%. Just to point out that standalone now includes our coffee soluble business and the base has been restated to that effect. EBITDA growth of 8% on standalone and 22% for the consolidated numbers. On a full year basis, standalone revenue growth was 11%, consolidated came in at 10%, EBITDA growth of 15% and 25% respectively. On consolidated financials, while you have seen the numbers and Sunil talked about it, I just want to point out on 2 specific items. One is exceptional items. They are largely attributed to stamp duty on the Tata Coffee merger and provision on prudence taken on some of the underutilized assets across our entity and fair valuation losses on a financial instrument as part of our annual review process. The other is on tax. As you would all know that we've been restructuring our corporate structure in the US, and bulk of it is now complete, and therefore we have taken a one-time gain of close to 92 crores in the tax line, and therefore the ETR for the quarter looks at a lower level. And with that, I think I would hand over back to Nidhi for questions.
Thank you. Thank you, Ashish. We can now go to the Q&A queue now, and we will take the questions from the webinar after that.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The first question is from the line of Abneesh Roy from Nuvama. Please go ahead.
Yeah, thanks and congrats on international margins and innovation. My first question is on Capital Foods and Organic India. I understand Organic India will be coming in FY25 numbers, but wanted to understand from inventory in the pipeline, how is it? Because initial part of any M&A, we do see that the inventory is there, higher channel filling is there. So when I see your numbers in first 2 months, that leads to a 532 crore annual revenue versus 705 crore revenue in FY23. In media interaction, you said for Capital Foods, you expect double digits. So this double digit is for 705 crore of a number, or it's from a more FY24 kind of a run rate. So if you could give clarity on both Capital Foods and on Organic India, how should we build in the FY25 numbers?
So let me take that. You're absolutely right. When there is transitions, there are adjustments of inventory, etc. Because remember, they had a multi-layered system. They had a set of super stockists, sub-distributors, etc. So Abneesh, in the integration, we've flattened the structure, integrated. So we've taken about 200 distributors from their side. The balance we've integrated with our systems. That's number 1. Number 2, we've reached to almost 95%, or 95% of our distributors have already built Capital Foods and we are on our way. We are basing our numbers of growth on the 705 to 750 sort of number, and we will work off that base. We are not working on the 500 odd base because we know it is underpegged. We remain extremely confident of our ability to drive the top line given what we are seeing on secondary sales. That's number one. Number two, what we are seeing the response to our integration in the international markets as well. For example, in the US, we moved from 4 distributors to 13 distributors because of their strong connections. B, I think the innovation pipeline is very strong, and Ajay being there continued with us, giving us the history and what he's seeing in the future of the business helps actively. In addition, as I said, the most important thing to drive at the front line is all our million plus and significant number of 500,000 plus cities. We've got three salesmen at the front end now, with one salesman focusing exclusively on Capital Foods and Soulfull, primarily because there is a lot of commonality in the product throughput, A, and B, the type of outlets that they will address.
And this will apply even for Organic India, right, in terms of the growth numbers?
Yeah, Organic India, we just finished on the 16th of April. We are still working through all the details. Again, there were only 24,000 outlets, so I mean there is a significant amount of headroom to grow out there. Again, we are targeting growth on the, normalized run rates for these businesses had they continued alone, and it's not on the short-term adjustments that we will have to do.
Sure. My second and last question is on NourishCo. So you have done exceedingly well past few years on NourishCo, and you have also given, I think, in the media interaction, a growth expectation of around 30% in FY25. So I want to understand here what are the products or the brand, sub-brands here which are doing really well. And in terms of distribution synergy, is it now largely done in terms of your total universe? So is a good penetration already there? And second related question is, first half, very strong growth in FY24, Q3 it slowed down, and Q4 it slowed down significantly for the entire sector. I understand that. But is the size now becoming an issue? Because FY23, 60% growth, FY24, second half, significant slowdown. Is size also an issue now, given the kind of growth you have seen earlier?
So let me answer it in 2-3 ways. Abneesh, I think size, we are far from where we will say that we've become sizable enough that growth rates will slow down. Both the category growth of packaged beverages in India as well as the opportunity for us to address that remains significant enough. The big brands in the portfolio which are growing are Tata Copper Plus and Tata Gluco Plus. Tata Copper Plus is seasonal but not as seasonal as Tata Gluco Plus, and Tata Gluco Plus, which is the higher revenue or higher margin product, is what did not fire as well as we thought it would because of the delayed onset of summer. In terms of the outlet base, we are now about 950,000 outlets, which is a significant, we are significantly behind the rest of the competitors, the large competitors if you look at it. So we've got still a significant portion to run, and we remain confident that we will continue to deliver these growth numbers that we talked about. Till January, we were very confident of hitting the 900 to 1000. Unfortunately, I would say second half of February, March was a little bit of a dampener, but nothing has changed on the basics of the business, so we remain extremely confident.
Sure, thanks. That's all from me. Thank you.
Thank you. The next question is from the line of Jay Doshi from Kotak. Please go ahead.
Yeah. Hi, thanks for the opportunity. First question is a bookkeeping question on Capital Foods and Organic India. What will be the aggregate amortization charge for both the entities and depreciation as well? And what is the ballpark EBITDA that you are building for FY26 for the EPS neutral math?
So Jay, in terms of Capital Foods is going to be around 160 crores for a year. Organic India, we've just closed, as Sunil said, on 16th of April, and we're still working through the financials and PPA. I think we'll be able to convey that number later. On forward-looking EBITDA, I think I will refrain from giving a guidance at this stage.
But essentially what we have said is both these businesses will be cash accretive right from this year, and EPS overall accounting accretive starting next year. FY26.
Will it be EPS accretive or EPS neutral? And is this after factoring in amortization charges?
So after factoring in amortization charges, Jay, the way we have built the business case, and if we deliver on that, then of course by year 3, we're likely to become overall accretive.
All right, FY27.
Yeah, FY27.
Correct. Thanks. And a couple of more questions around profitability. First of all, thanks for the disclosures on profitability movement for different businesses. Now, from next year perspective, what is the outlook on profitability for the international business? And I'm talking about the international branded business. We understand the volatility non-branded. And second is, what about the synergies for Tata Coffee? At the time of a consolidation merger announcement, you had indicated some cost savings and other synergies. So are you still on track or expecting those to materialize? And if you could quantify that for us again.
Let me take that question. We had always maintained that the international EBIT margins should be accretive to the total India portfolio. And starting this quarter, given the UK strong turnaround, I would say, and B, the continued delivery of Canada and the improvement in the US. We still got work to do. We expect international to continue to be accretive on EBIT margins going forward. B, overall as a company, I think we've said EBITDA margins, we've delivered 15.3 for whole of last year. Last quarter was 16.1, but we will be improving off the 15.3 number as we go forward. Sorry, on the Tata Coffee merger, yes, we have started realizing the synergies. The integrated organization has already got announced, and therefore from a cost perspective, we are seeing the synergies coming in. In terms of revenue synergies, early signs, there were top line synergies as well as we put both the teams together. Complementary geographies, complementary products coming together. We have started seeing early signs of those synergies coming in, and we do expect to deliver on those commitments.
Thank you so much. I'll get back in the queue. Thanks a lot, and good luck for FY25.
Thank you. The next question is from the line of Mihir from Nomura. Please go ahead.
Hi, so good morning. Thank you for taking my question. So my first question on the tea business, on the tea volumes. How should one think about the tea volumes for the coming year? In fourth quarter, volumes became flat. No sooner the base volumes came back to positive trajectory. And that trend will continue. So can volumes in tea business languish in FY25 or steps are being taken, to curtail market share losses?
I'll react first to the market share question. As I mentioned, we don't expect that the industry grew by 7% last quarter as reported by Nielsen, and therefore we would wait for competitive data to come out before making a judgment on that. That's number one. Number two, long term, we do expect the India tea business volumes to be about a 5% growth and a couple of points on that on our price mix and revenue growth management numbers. Yes, this quarter was a bit soft compared to what we were seeing as a trend because we had seen volumes coming to a 2 to 3% volume growth. We do expect to see at least a 2 to 4% growth, volume growth numbers, at least in the short term. But in the medium to long term, we do expect tea to come back to a mid-single digit volume growth.
Understood, sir. So my second question is on the coffee soluble business. What is the steady state margin, for this business? And given this 22% margin is driven by price increases, can these margins sustain for some more quarters till it gets annualized, or how should one look at the margins for this business, at least for the coming few quarters also for the year?
So again, I would separate out the non-branded margins into two different pieces. There is a coffee solubles and there is a plantation business. Coffee solubles is a pass-through, largely a pass-through number. There might be differences in margins between timing of buying of inventory and selling of inventory, because remember, we are buying coffee from various parts of the world, converting it to extracts or solubles and selling it onwards. So there is an input price also differential, whereas in the plantations, we get the upside of the entire coffee pricing going up. It will remain volatile for some time. We had seen a sort of